Okay, so today we left off, like, we were going to cover Iron Condors. So it's a big subject I'm going to spend at least an hour on. Next week, we're going to be covering um, a bit of back ratios, and we're going to go over butterflies. And butterflies is another big subject that there is a lot of different types of butterflies that I have never done. I have done a iron butterfly and a regular butterfly. At the same time, these strategies is what made that guy who developed the iron butterfly extremely rich. So we'll learn about that and the history around it and how you do one. But today we're just going to focus specifically on iron condors. What is an iron condor basically? So an iron condor is basically, well, text, pictures does better tricks. So it's basically two types of spreads. It's a bull put spread and a bear call spread. So basically, it's two different types of vertical spreads. Um, Usually, at Iron Condor, what people do, they want to sell premium against it. So they always try to pick a strike that is far out of the money, and another one that's not far out of the money to collect premium. So in this graph right here, we show that, okay, this trader is going to make 1,500 if it stays between this range. If it stays behind his range by expiration, he can make that much. Otherwise, he's going to lose on the long put or the long call side. So it has to stay between this range. And usually what the short put is more expensive than the long call. So if you think about that, that makes sense because when you are trading SPX or SPY, if you bought the 345 call and you sold you have the 335 call and you have the 336 call, the 336 call is cheaper than the 335 call. So that does make sense because, math wise. At the same time, when you're closer to the money, it's more expensive and you're a little bit more out of the money. So that's the usual suspect. In this case, when we sold a short call, you basically sold to that person who wanted to buy it at that price. And then you also bought a long call, so you bought it from someone at that price. So that is essentially a for a credit spread right there. So this one right here, the short iron condor explains a two credit spreads basically. So here it explains you buy the 345 for $10 and you sold the 400 put. I mean, you sold the 350, no, 450 for $10 and you bought the 400 for 250. And then for the bear call spread, that is you sold the 350 for $10 and you bought the 600 for 250. So since $20 it collected for the selling the 450 and 450 put and 550 call. $5 is paid for purchasing this, purchasing the 400 put and 600 call. This Iron Condor trade example said to be entered for a net credit of $15. Basically, if these strikes right here do not go out of the range of their here, you can easily make $115 per credit. So it's $1,500 right there of money. And then this is friendly to data decay. So the impact of data decay. If the price between the two spreads If the stock stays between the two spreads, the option value would consist of 100% intrinsic value, which is lost over time as options approach expiration. If the stock price is beyond the spreads, one of the spreads, the Iron Condor value will steadily approach the value of the spread as time passes. For instance, if the stock is about at 150 and the trader has Iron Condor for 140 and 145 foot short call spread at $5 width, the Iron Condor will steadily appreciate to $5 as it approaches value. So basically what he's saying is that he short call spread. So basically this thing's in the money basically. So you're basically gonna be losing money. Uncle Eagle, is that right? Because it is a short call spread.
Correct.
Yeah, so this one's in the money already. So, you're basically losing money, but you have a max loss. So if it's $5 wide, you're basically losing $500. This is a no-brainer zone. You better close that out before you get signed. So Uncle Eagle, you can add on.
What was that?
Oh, I thought you were going to add on. You're going to say something.
No. You've got that under control. I mean, really, the secret and the core of why we're teaching Iron Condors. Scroll up for a moment.
Yeah.
Iron Condors are, if you can look at this, Iron Condors are absolutely amazing in twofold. Basically, we know that a price is not going to go above a certain amount and below a certain amount, right? So why we like Iron Condors is because we know a price of any ticker or a specific ticker is going to stay within the zone. So now you're going to do one of two things. You're going to be on the call, you're going to be on the normal option side of things, the debit side of things, where you're just going to make money on that because you're going to open it and close it like normal. And then there's the credit side of things where you're going to gather premium. Tesla is an amazing example of gathering premium in an Iron Condor, because while you've got these bears and you've got these bulls on both sides, right? One group says Tesla's going to 500. The other group says Tesla's going to 400. So what you do in an Iron Condor is, you, as a normal trader who understands how science works, would say, okay, Tesla's not going to 500 and Tesla's not going to 400. So I'm going to buy and sell a credit spread on one end and the other. And assuming Tesla stays in the middle, I'm going to gather all of that premium because I know it's going to stay a neutral stock. Go ahead, Tesla.
Okay, so that's what the important is. So time decay is always your friend in
go ahead. Sorry, Emilio.
Yeah, I don't really mess with Iron Condors, and I'm just kind of listening while I'm doing homework. But anyway, so what happens during like a breakout? So like if the Iron Condor, or if the stock, for instance, breaks out of the Iron Condor zone or whatever, do you know what I mean?
Yeah. So
basically, I was gonna say, close the losing side, keep the winning side.
Oh, okay. So basically, you're opening up two spreads, right? A bull spread, a bear spread. That creates an Iron Condor, and if it continues to break out to one side or the other, you would just close out the losing side, and you would continue to be in profit with the winning.
Close it and then stack the winning side to get your money back. That's what I done.
Yep.
It happened to me before, like, I don't know, I used to trade a lot of SPY. Like, SPY broke out and one side was breached. I had to figure out how to close that side. Robinhood, not the best place to open an Iron Condor, because then, what Robinhood does to you is that they make you, what is it? Okay, so Robinhood will bundle it up together, and compared to other brokers, they don't give you the liberty to close individually those strikes. So that's why on Robinhood, I always say, like, if you're doing trading Iron Condor on Robinhood, you best not open Iron Condor together. You gotta open them separate, because if you open them separate, the advantage is that if you can easily close out losing side easily than just putting it all together in one in one trade.
That's exactly it. Yeah.
Yeah.
So are
And
these
that
credit spreads or are these debit spreads?
it can
You
be
can do
both.
it on either, right? But Tiffany and I both like playing the credit spread side of the house
Yeah, I was gonna show you the debit spread side. It's a little bit more pricier, but you're basically saying, okay, I got to find that picture.
What's
So
really nice
how
about
much
the
capital
credit
do you
spreads in
actually
an
need?
Iron Condor, Emilio and team, is that the broker only takes margin for one side. So let's say you're in a credit spread on the bearish side, and you're like, oh, okay, well this thing's not going to break out. If you buy the bullish side as well, right? You get the credit for both, but you're only getting hit with the capital on one side, which is kind of cool. The broker doesn't take capital on both sides.
Oh, okay. That's pretty interesting.
Yeah.
All right, so this is kind of small, but only thing I need to do is screenshot this for the debit side. I'm still going over any of the short Iron Condor, but I am going to go over this. I just have to put it in my notes so anyone who has this can see it. So here's what it does. So when volatility falls, because as it says here, implied volatility measures intrinsic value of a stock option relative to time those options expire. As an Iron Condor seller, the best case scenario is that the options lose value over time, and it expires a piece of shit. So, in that case, that means both sides lose value. So as time goes on, like the stock is staying, like how like the market right now is staying in this a range between. Let me look. What's our range right now for SPY?
All right. So let me ask you another question because you actually piqued my attention while I'm doing homework here.
So, okay, we're in a range right now between 340 and 347 right now. So this is the perfect time to do an Iron Condor on SPY.
What's your question, Emilio?
Okay, so since we're dealing with ranges right now, right? So basically, in order to max profit on the Iron Condor, you basically don't want to win or lose on either spread.
You want both sides to be out of the money.
To expire absolutely worthless.
Yes, that is correct.
Which 99% of options do.
That is correct. Which is why we say
what?
Which is why we say playing credit spreads is you're the house. You're not the gambler, right? So you win 80% of the time or more on playing credit spreads. That's why Tiffany and I kind of push it. Now, the problem with credit spreads is they take more capital, right? Because I've basically got to, the broker just takes more capital. they collateral, not capital. Yeah. Sorry, takes more collateral.
So would it be better to do like Iron Condors or something like BAC or Coca-Cola? Because
yes, that's exactly
you could do that.
Stay in a zone for a long time.
Okay, if you look at this real one, you know how it doesn't have not moved for a while, 3 months. You can basically put an Iron Condor on this, and they already have earnings already. So, earnings mystery is over.
Yeah.
So you can basically sell this. Like, if you load, like, you can do 30 days out, and you can sell these 172, and then you can sell the 190. Because it's not going to go 190. Like, they're at least 15 days out.
Right. Unless there's crazy news, and then that happens, and you just get fucked.
Right. You just need to find stocks that are in a range. For me, I always find stocks in a range that's stuck in a range.
Amelia, going back to SPY as the example, you know how SPY range traded the entire week? Like it did not break out. That's why SPY would have been perfect last week for a nice ending Iron Condor. My problem with doing it in SPY specifically is that news will fuck you every time.
Right. That's why I've been avoiding SPY.
All right, so my question to you, Tiff, is would you be able to I guess show the group on something or an Iron Condor or something like BAC or KO that specifically trades within certain ranges because it's such a slow mover? Because I feel like that would be really great information, especially for the newer guys, who don't know anything about options in general.
Yeah, so like you should identify the ranges that BAC trades and how much time do you need for BAC to actually hit. So let's see. So basically the range that I'm identifying right now is, so we're stuck right here. I would say we're going to be selling to a 225 and then a very big range of let's see, 2350. So those are strikes I'll be selling. So we really know our range right here because, you know, how many times we touched in this zone never breaks out. So BSC is kind of tough in the sense that you probably, the intrinsic value of them are close to each other, and BSC doesn't do that much, so we can take a look at that. So let's look at BAC 30 days out. And the reason why I'm doing 30 days out is because more intrinsic extrinsic or the intrinsic or extrinsic value on these. So basically what we see that BACs are here. So now I already identified that range that BACs are stuck in. So basically I'm doing the put side first. On the put side, I actually then thinking, okay, BAC can't really go anywhere. So let's see, we can do, we're 24 right now, 24.90. So the most comfortable thing for me is I will sell a BSC 23 strike and then buy the 22 strike as a credit spread. And then I'm going to switch to the call side. Basically, let me expand this for Robinhood people. Since I know that BSC cannot touch 26, I probably want to do these or above. It can't even, it tried. Let me look at the graph of the chart. So at the high, $26 was the high.
That was back in August, though.
And it still applies because we still have a lot of sellers right here. So, you know, if we know that 25.75 is a range, so we want to start selling 26. But we want to be safer, so we want to do 26.5 and then buy the 26. So your net credit you're going to get is $20, 30 days out. What's the inherent risk of this? Well, the more time you have and it doesn't expire by November 27th, the more the chances that, you know, we can fluctuate between this range and you will lose $100 of collateral. No, not $100, $80 basically per spread for BAC. Because, you know, you're giving yourself more time. You collect a lot of credit if you give yourself more time. Assuming that BSC continues to trade in this range and not do anything.
Now, let's be clear. You have a 20% chance of losing $30. You have a 80% chance of gaining $20.
Yeah, so let's do this on my option analyzer. So we're gonna pick Iron Condor for BSC. So we're not gonna be picking. We're gonna go 3 days out, and then we're gonna pick those strikes that I said. So we're selling the 23.5 and buying the 23. And then we're selling the 26.5 and buying the 27. Actually, is that one that? I'm going to check Robinhood real quick.
Yeah, I was just pulling up Tasty Works. I was like, actually, this looks pretty nice.
No. Really? 7 credit? Are you serious? Oh, okay. No, it's not what I want. I think Robinhood's just lying to you. Or the broker. Or maybe different brokers. Okay, this will make me have to push it up a little more. So now that means I have to go a little bit wider on this one. The reason I had to do wider in this because you have to pay for commissions. math does not sound right. Oh, okay, I got confused there. That's sell 23 by okay, that's why. Okay, this should be 27, and this one should be 26. So let's see. Different credit.
There we go. That makes sense.
Yeah, that makes more sense. But in this case, we probably want to do more collateral. Oh wait, hold on, let me see. Okay, so this one right here, it's only $50 of collateral, so that makes sense. So because this is 50.55, that is $50 right there per collateral. So we can stack those if we wanted to. But if we want to save on commission, and we probably would make it wider. So we'll probably do like 22.5 net credit. That's $100 right there. So let's analyze this. So assuming that BUC stays in this range, this is the probability. This is really low probability. So it says 23 chance that BSC will close below 23.4, 48 chance that BSC will close between these ranges, 23.4 and 26.30. That's pretty low probability. When you're doing Iron Condor like this, the difference is that you want at least 56% or more chance of success. But, this is a risk that you're willing to take. But if you want to do less riskier, you want to go a bit further out. So in this case,
so sell the 22.5 put.
Yeah.
Buy the 21.5 put. Then sell the 27.5 call and buy the 28.5 call, and that should give you a 70% pop. So you're selling the 22.5.
Oh, wait, hold on. It was duplicated.
Oh.
Okay, there you go. Okay, so
there you
this
go. There's your 74%.
No, this one's skewed right now. So hold on. I hate how E-Trade does this when I just do it, because by default they make the inner wings.
So what are you doing? You're buying. So you buy the 28.5.
28.5.
There you go. There.
That is one weird Iron Condor. Hold on. Let me see if I'm doing this right. Okay, no, I'm not doing this.
I have it up in Tasty, but long story short, in Tasty,
I'm not doing it right. That's why. There we go. Okay. That is way better. Let me see. Okay, so this is 71 chance that.
There we go.
That is a better probability than the one we saw before. The one we saw before was like 50% chance. That would be like a risky chance because BSC you don't know BSC is going to be like $26 in November. But knowing this, you can collect 68 swing this.
And I'm showing $24 on
Tasty.
Yeah.
Okay, so how much would they cost for that trade right there? And what
30 cents. It would cost 30 cents if you're looking at that on her screen. It's going to cost you 30 cents. Yep.
Okay, so for the new people, $30.
Yes, and and that's just collateral, right? But you're guaranteed. So if you win, though, it's $17, which seems like a high risk reward, but you got to take into account your probability of it hitting, right?
Yeah, it's a 2-1, but it's a 71% chance of winning.
Correct.
Right, that's a higher probability than just naked option.
Wow, that's interesting.
Yeah, because naked options probability is what, 20% usually?
What was it?
Naked options is usually 20%. That's a very high probability for naked options is 20%.
Yeah. Right. So in this case, we're looking for a high probability chance it's not touching. But as of right now, do not touch SPY. I do not touch SPY because the probability of SPY doing it's range bound. It will fuck you over anytime. So like you can be
In this particular political climate.
yeah, like last year I did Iron Condors safely. That's like SPY only traded $3 a day. Now SPY trades in $5 or $7 a day. So it's too annoying to do it. So now we're just trying to avoid that, and we're now just trying to find tickers where we can do Iron Condors. Like the one I showed you, that railroad company. I'm noticing that railroad companies are extremely trading in a tight range. So we could break out soon or break up, but maybe like 30 days out, we might see. Okay, so this is a sell side Iron Condor or a short Iron Condor. So, and another one that we want to go over, it was KO. We want to do KO since, let's look at KO's chart. We have to look what ranges we can find on this that can fuck people over every time. Okay.
Now, another really great, while she's looking this up, safe thing you can do, Emilio and team, is if you own 100 stock of something, or you have enough cash for 100 stock of something, then you can protect yourself by still doing an Iron Condor and collecting a premium. Yeah, but you're doing covered calls and cash covered puts. And so you can protect yourself that way as well.
Oh yeah, I used to do that on Snapchat.
And it reduces your cost average, your dollar cost average as well.
Yes.
So that's something that Warren Buffett does with his portfolio, and it's literally it's free money. It's free money.
That's it. It's free money. Once you own 100 stock.
Yeah, I had 100. I always regret selling out of Snapchat when I bought for like $16.50. I had 150 shares. I was like, okay, I'm done with Snap because I needed the money to do something else. But I kind of regret that decision now.
I had 500 shares of Space. I regret selling that.
Oh, shit.
Oh my god, I had a $9 average of Space.
I kept telling everyone to buy these stocks, and then I sold out. I was like, fuck it. I shouldn't have told myself to sell out, and then people who held are banking like Jesus. Okay, so I already identified the ranges that we can pay attention to, and because KO is also a very liquid stock, so right here I already see that we struggle at 52. And we have a main support right here of 48. Let's see, 48, 50, 60. So we want to do somewhere between right there. So 52 and 48.60. So basically, let's go on Robinhood for the Robinhood people. Type in KO. And what I like to do is 2 weeks out for Coca-Cola because it's that liquid. Now we're gonna go into the puts first because I always like to do puts first. So we set 48.50. We always want to do at least one strike below it because you want to give yourself a buffer. You always want to give yourself some buffer room, and you want to always look at how much KO can move in a day. So I forget what KO can move in a day, but I think it's just $2 or something.
And that's the implied volatility that she's looking at. Well, she's looking at the ATR right now, but whenever you're doing this, you need to look at the implied volatility, figure out how much.
You need to look at the implied vol. So
I don't think KO ever moves more than 1% or 2% a day.
So yeah. ATR is 92 cents. So give or take, we'll just say it just moves $1 a day. Because we did see, we did see it move what, $2.9, $1. So $1 is okay.
So you basically get it $1.50 or $2 out, and you're set, depending on the credit.
Right. So
would you want to do closer ones, or like closer as far as expiration, or would you want to do farther out expiration?
So further out expiration is going to give you more credit every time, but obviously the further out you go, the higher probability you have that the stock's going to move the wrong way, right? So that really does depend on you.
So
Yeah.
would it
So
be what advisable or non-advisable to do weeklies for these kind of
Yeah. So as a
yeah,
new person, I would agree weeklies is your safest. As you start learning
yeah,
stocks over time, you can get further and further out.
yeah. So I wouldn't touch these because the credit's too low.
That's my problem. Yeah, weeklies, the credit is garbage.
So that's why, like, I always get the week after or 2 weeks out for irons because the credit's much higher, and I can probably like figure out which one's good. And we already knew just by charting it out, this is where the if we follow to an EMA line, we're pretty much at 40,
And I
49.
like monthlies.
Yeah, we can
But
buy monthlies too. Um, Tasty Works, I think the example they do is that they buy Iron Condors monthly. I buy Iron Condors every 2 weeks. I could buy Iron Condors every 2 weeks if I wanted to, but I don't. I rarely do because
so here's a K, and I like Tastyworks' interface, but here's a K-Works that I just found within seconds that I kind of like. So by the this is going to be November 20th.
okay, November 20th.
Yeah. So buy the 47 put,
Buy the
sell the 48.
Oh, all right.
Sorry,
Sell
I
the
said that weird.
48. I mean, I get it. I get it. I
Yeah,
mean,
yeah,
it gets confusing because you have to. Okay, so the current risk here is still $1.50. Calculate
yeah, exactly. So that's a $27 credit right there.
this.
And
Yeah. So like,
then you
when you do the call side, we have to do the same
so
side.
buy the 53 and sell the 54. Your max loss on this is going to be $101, but your max profit is going to be $99. So the risk to reward on it is very good. Tiff, you there? Did I lose? Hello?
No, I hear you. I
Okay.
don't know what happened too. Yeah. By the way, guys, feel free to ask questions. Don't let me ask all the questions. I'm doing homework.
Yeah, you guys can't be scared of us. And this is a lot to take in for a lot of new people, but I recognize some of you. Some of you aren't new. So we're definitely teaching you guys some newer, cooler stuff to kind of lock in. And really and I don't know where Tiffany is, so I'm just filling space. Maybe her internet died out or something. But we're teaching you more longer term strategies. The day trading's fun and it's nice and everything, but you need to understand irons and you need to understand credit spreads for your long term portfolio, which is what Tiffany and I are trying to teach you. Not to mention, because you're making an 80% of the time you're making a profit on this, it's a great kind of thing to augment your day trading because you won't lose nearly as much on a regular basis.
Yeah, it's also a great way for the people that still work like full time and they can't focus on charts as much.
There you are, Tiff.
Could definitely do that.
You died out on us, Tiff.
Hey guys, I have a question.
Yep, go ahead.
So basically, Iron Curtain is for long term, right? It's
Well, Iron Curtain is a Russian firewall, but an Iron Condor, the bird condor, no, they're not longer term, but they're not day trades either. Much to what Emilio was saying, you probably want to play these like once a month and just kind of keep track of them on a weekly basis. But it's definitely not something you look at every day or every minute or every hour by any means or stretch of that word.
Okay, thank you.
Which is what makes it really great.
Okay.
Yeah. And again, you play this in your long-term portfolio. This is not something you throw, or your spread portfolio. This is not something you do in a cash account on a day trading level.
Okay. Thank you.
No, you're anytime. Any other questions? Tiffany, where'd you go? Come back.
I have a question.
Yeah, go ahead.
So, for these Condor trades, what is the bankroll that one must have to get in?
Yeah, so I can show you that. Here's something. I'm just going to steal the screen from Tiffany because, again, I don't know where she kind of disappeared to. I assume her internet died. But okay, so this is my Tastyworks interface, which isn't as pretty as her E-Trades interface, but it'll kind of show you, right? So a bankroll on this, if I wanted Coke November 20th, I only need $100, right? And I'm basically putting $100 of buying power up to make $99 by November 20th, right? So if I wanted to increase that, it does increase 1-to-1. So if I wanted to buy, let's say 5 contracts, then I need $500 and I'm making 500 on the side. This is Coke as an example, right? If we go back to, or what's another good one that range trades on a regular basis? I mean, I know we mentioned BAC earlier, right? So if we go play the same BEC spread that we were talking about, well, I only need $76 in order to pay, or in order to gain 40 or $24. Now, obviously, as I increase that, right? So 5 contracts, 380, I'm making 120. Make sense? So you don't need a huge bankroll, but like I said, this definitely is a long-term portfolio play. Santi, was that you who was asking the question?
It was me. The reason why I asked is because obviously we're all new, and each one of our bankrolls is different. So as we get a little bit more knowledgeable and we're actually having successful trades, most of us want to grow our bankroll. I think you guys just want us to be more diversified when it comes
That's
to
exactly it. Yeah. So one way I like to do it, and I don't want to take Tiffany's time, but I know she's out. So Tiffany, let me know if you ever come back.
I'm out. I mean, I'm
there you go.
back, but you can't explain it because I was like busy. But it's the same concept. This whole
Yeah.
day
So
is like Iron Condors.
yeah, so I always like to say for the new guys, Santi, and everybody that's on, your cash account that you have should start at $1,000. Your spread account, then after $1,000, with you can turn $1,000 into $2,000. You need to open up a spread account and then transfer $1,000 out of your cash account and into your spread account. Then in your cash account, you turn $1,000 into $2,000, and then you transfer that $1,000 into your spread account. And now in your spread account, you have $2,000. At that point, you start playing longer term spreads. So this is going to be weekly spreads, monthly spreads, etc., over longer periods of time. Now, when you turn your $2,000 spread account into, let's say, $5,000 or $10,000, you're going to transfer everything but $2,000 out of your spread account and into your long-term account. And then let your long-term account, that's where you buy stocks, not options unless they're leaps. You buy stocks and leaps. And that's when you start picking up dividends, etc. And then at the end of the year, you transfer from your long-term account into your IRA or your retirement account. And that's how you become successful. So you're always day trading, always day trading, always day trading with $1,000 over and over. Now, once you become the big guys, the Toros, the Austins of the world, you can adjust that. So instead of day trading with $1,000, now you're day trading with $10,000. But you've got $20,000 to $50,000 in your spread account, and then you've got $100,000 to $1 million in your long-term account, and then your retirement account is $1 million plus. That's the way we play the game. That's how we always grow. The problem with doing day trades with your cash account and always growing your cash account is you're making bigger and bigger and bigger bets. And then you become investing banks. And we don't want to become investing banks. Always start with $1,000 in your cash account and grow that over time. Sensi, I don't know if that helps answer your question.
Makes perfect sense. And again, that is, I think, a very good strategy because, you know, as you guys said, 20% is not really a good to bet on something, but that's what we're doing. And so, yeah, we might have some wins, but obviously the numbers speak for themselves. A lot of people lose on.
Yeah, you're losing 80% of the time. Exactly.
Correct. So if there's a way for us to go ahead and increase it to 60 and 70 and even 80%, and having a big bankroll, it's not a guarantee, but it obviously gives you a much better leverage, and rather than losing the money that you've already made.
Yeah, so I think I posted a SPY calculator the other day, and this is something that you could always play with in a spreads account that grows over time, right? But this starts a spreads account at $500, and at the end of 52 weeks, you're at, ignore the red and stuff. I was playing around some numbers. You're at $31,000. So this easily, while you're still doing your cash accounts, right? Because spreads aren't guaranteed, but you're going to have a lot higher chance of winning when you turn $500 into $31,000 in purely just cash. Do not
Right.
follow the strategy. It's just
So yeah,
just
this
on paper.
Robinhood account that I'm doing is the same thing. Like I'm basically using spreads because I pretty much subscribe to a spread server. I basically am trying to grow this with just spreads. So I started this account. I think I restarted it again, and we're using baller stuff. Let me just share it. It's a mix and match, but I feel like I could do this on Robinhood because there's no commissions, so it's a lot easier. So let me just share. So, and this month right here, see, I didn't have any. I took some money out before that. This account at one point was $800. See, the history of this account has been hit or miss. I don't know what happened there. I think I was gold one time, I was shorting the market, and then I took money out. So right here, I'm pretty much stagnant. I'm pretty much at right here again, almost there. So $500, $100 up. How I grew this account, I took some swing trades here, and then I've been just growing it with just trading credit spreads. So the magic of that is that because I have one right now for Disney, because I know Disney support and resistance, it can't really go to 120. So what I did, I sold a credit for $13. I easily can put a Iron Condor for Disney. What was the date for this one? This one is expiring this week. So just knowing Disney, I am probably going to take advantage of this, and then I'm going to do an Iron Condor. You see how the premiums on Disney right now, like because Disney doesn't move that much. Disney can only move like $2 a day. Oh yeah, $2.90, $2.90. So $3 a day. So knowing that, I'm probably going to take advantage of that, and I'm going to start selling credit spreads to at least Disney's resistance. So Disney's resistance, look at Disney's resistance is the 130. So 130 resistance. You see this gap up we had on Disney last time? And we filled that gap. Now we're just trying to trend up. So end of the week, I'm looking to try to collect 132 and 133. So 133 right now has credit of 51. So we're gonna go at the bid. So 51, we sell the 133, and we buy the 134. So the ask right now is 46. We bought that, and that's 14 credit. So that's 14 credit I can add on to the one I already am collecting. So I'm already collecting one side already. And since I'm not using extra collateral to do this, because it's tackling on to the put credit spread I'm doing, I can collect an easy extra $14. So that's what I'm going to be doing this week to tackle on to collect more money. Because basically right now, we already know that Disney can't even go above 130. If we break out to 132, that's when I start worrying. But we're not going to be going there anytime soon for Disney. Disney had really struggled here, so it's trading in a really tight range on Disney. And we can see that on a 4-hour time frame. If we draw a box from here to here, this is the box. We got a teal box right here. This is a box range that Disney's trading with. So expand that. You can see what Disney's doing. This is the top of the box. This is the low of the box. And now we're just trading in this range. Does that make sense?
It does to me, but I'm very experienced. So anybody else have any questions? Okay.
Guys, if you don't ask questions, you're never gonna learn. You gotta
That
ask
is
questions.
100%
Yeah,
accurate.
if you're not gonna ask me like how am I gonna like plan this out, because this was already in the works that I was doing, and I already told you guys 2 weeks back that I was gonna be in this one, and then I was still gonna plan to open credits, credit spread, and make this an Iron Condor, collect more money. Since you know Disney's range, you can also plan ahead to like 2 weeks out for Disney. So you go on the put side again for Disney, and since Disney, you see how much credit can Disney move. So yeah, it's trading at 128 right now. And then basically you're just gonna try to pick the same strikes again. So Disney 120, 119, sell the 118 for 16 credit. But if you're not satisfied with that credit, you can just make it $2 wide to get $37. With that said, if Disney doesn't, you always want to worry if Disney goes to 120, and that's never the case for Disney. And then we can go to this side, to the call side, when we start planning ahead. Okay, where's Disney's main resistance? Since it's a $2 wide spread, we're probably going to target a little bit farther out, and then we're going to target 138. So this is the farthest we can get for the same type of credit, because there's no 139. So this right here, this risk to reward profile, it's $74 of credit. But then when we go on E-Trades, if we're going to do that, we're going to do the same one. So Disney 1113. So Iron Condor 1113. Okay, so basically we're going to do the same thing. So we're going to go, let me just put this to another window so I can see. So we're going to be selling the 119, and buying the 117. We're going to be selling the 138 strike, and then buying the 140. So we'll want to see the risk profile for this and chance of success. So it says 31 credit here. Maybe Robinhood's freaking me out, freaking people out. So better be right. Because this is a freaky Iron Condor that I'm doing. But it's what is your chance of success? Oh my god. Okay, so sell to open. Yeah, that's right. Buy to open 138. So we're pretty much right there. So that should be the case, except that this is a skewed Iron Condor. So 75% chance of making money, because this is really wide. If we just made it tighter, so in this case, we're going to be selling the 137 and then buying the 138. Wow. Well, we get the point. We're going to look at this because this makes more sense.
I can show it on Tasty too. So
yeah, because right now E-Trades, it looks really weird.
So what were you looking at? You were looking at the November 13th.
Yeah, so we're gonna like this was the strike. So
and you're doing what? You're buying the.
Yeah. So I'll send that.
No, just keep it up on your screen for me, real quick. So you're.
Do it on Discord too.
Oh, gotcha. So you're doing that, and then you're doing the 38 and 40. Got it. So I can show it in Tasty.
Yeah.
So this is what Tasty shows, and this is one of the reasons why I enjoy Tasty, guys. It's just because it's really good at showing this. So if we buy the 118, so we're on November 13th. If we buy the 118 and we sell the 119, which is what she was showing, and we sell the 138 and buy the 148, our max loss is $147. Our max profit is $53, but our pop is 58%. So actually, this is not a very good pop. So what we'll probably do is bring this down and do this. Boom, 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 boom. Ooh, Disney just isn't pretty.
So we want to always want to be the edge of that 1 or 2 standard deviation line. It's where we always want to collect the most credit out of. So we already know that Disney can't even go that side. So this pretty much is a good one already for 41 credit.
Okay, so 41, but your capital or your collateral is going to be $450, but your pop is 76%. So if you know Disney can't get to 145 and you know Disney can't get to 116,
So
you're going to pocket
we can probably go
$41.
closer, basically, because Disney can't move that much in one day. So it makes sense to bring it a little bit closer.
I mean, you could do this.
And it's on,
There you go.
yeah. So it makes sense.
Because your IV's right here. So someone in the chat just asked about JMIA, and I don't trade this one very often, but this is another great example of something that moves a lot. So if we look at November 20th and we do the same credit spread, right? So we're going to sell that, buy that. And again, I'm just using the IV. I haven't zoned this out. Oops, wrong way. I haven't zoned this out, but so if you just use the IV and that's it, and you bought one, you have 72% of pop, you'll make $28. Your max loss is 72. This is one you could add contracts to. So if you had, let's say, a bank of $500, there you go. So you put up collateral for $432 and your max profit is 168 on November 20th, if it stays in between these zones. So if you know GMIA is a great zone trading company, you could do this. And if you wanted to make a little bit more, you kind of pull it inside that, right? So now your max bet is 396, but your max profit is 204. But you lowered your pop because of the implied volatility.
Okay, so quick question. So
yes,
are we looking at a price range for stock when it comes to some of these options, or is it just the fact that they don't move a lot? Like AT&T, I've worked for them for 10 years, and they really don't move hardly ever.
Yeah.
You know?
But
their stock is
recently.
in the 30s. What's that?
And until recently.
Yes.
Yeah. You're completely right. AT&T, because they don't move, right? And literally their ATR is less than $1, right? AT&T is an amazing example of playing a credit spread. Again, until recently when all their shit started breaking. But ignoring that, you are completely correct. So here's like an AT&T spread that I would play literally every single week. And I basically just make $15 a week for no apparent reason. Just constantly and forever, right? And I have a 90% pop on this to make $7, right? So you could totally do that over and over and over. And you basically just play that every week.
And now, is there a way to increase that return?
Yeah, it's called a bigger spread. So if you get really ballsy, let's say, so as you can see, the implied volatility is 80 cents for November 6th, right? So right here, you can see on Tastyworks, the little scale right there. Hopefully you can see my computer. So if I get really ballsy, I could do, sorry, that's going to be a sell. I could do this, right? And now I'm increasing it to $32 because I'm increasing my spread, right? And that's basically how you do that. Or I could just keep pulling it out further and further and further.
Okay.
Now I still have a 59% pop on this. Now, if I pull it out just a little bit, I could do that. Well, I'm down to $14, or I could do that. Now I'm up to $19, right? But I'm going to increase. I'm going to decrease my pop every time.
Right. And then, so that kind of ends, we're talking about the sell side. So we have to do the opposite side. Since we already spent an hour next week, we're probably going to continue the buy side Iron Condor. So we're going to probably overlap 2 workshops together next week. Because we still have to go over that subject, but we don't want to waste time, and we got to see if Austin's still around.
Yeah, Austin's going to join us at 11:20. So you've still got a good 20 minutes left.
All right, so let's show them a buy side Iron Condor, and we're going to flip it.
So what example do you want to use?
What examples do you guys want to use? Something that doesn't like punch the budget, because when you do a buy side Iron Condor, you really need to establish a budget, how much you're going to spend, because our buy side Iron Condors means like you cannot, it doesn't stay in that range. You're expecting that it moves outside the range.
Opposite, exactly. And that's important to know with the opposite. So a debit spread Iron Condor, which we're looking at for AT&T, right? So here's a great example of so we were just looking at the credit side. So this is the credit side where my max profit's $14, my max loss is 86, but my pop is 72. And what I'm basically saying is AT&T will stay in this range no matter what, end of conversation. But the debit side of the house, which is what you guys are more familiar with, my profit is going to be $86. My collateral's only $14. But my pop is only 28%. And that's because I say AT&T will not stay in this range. So AT&T will break out of this range. And that's the big difference of the credit spread versus debit spread.
So would you say that Tesla or Facebook are companies that would go ahead and break those?
Yeah, I mean, every company has an IV, right? No matter what. So here's Facebook as a great example. And I'm going to use the November 20th monthly, right? So what are my chances that Facebook's going to break out of this IV? And the IV is 30.50. So basically the computers of the world are telling me that Facebook's going to stay between $255 and $315, and it's going to stay in that range. So I can either buy a credit spread that looks like this. Oops, other way around. And this basically says I have a max loss of $373, a max profit of $127, and a pop. And for people who don't know what POP stands for, that's probability of profit. So 61% of the time, I'm going to make a profit on this deal. But this is a credit spread. Same concept, Santi. What I'm saying is Facebook's going to stay in this zone. But what you're saying is, well, I think Facebook's going to break out of this zone because I know something about Facebook. Great. So I'm going to buy an Iron Condor with a max loss of $127, a max profit of $373, but I only have a pop of 39% now. So now I say Facebook's going to be either less than 252 or more than 320. Does that make sense?
This is where we have to establish a line where if you are buying a buy side Iron Condor, you better be close enough that either side can move. If it moves to that side, the losing side, it's where you just lose. So if you're bullish and you're not, or bearish, or you're not picking a direction, basically what you want to do for buy side Iron Condor, you want to be close as much as possible to money. It's the same thing with a debit spread. You want to be close as much as possible, so the probability of profit increases. That makes sense to everyone. Like, you have to be close. It's the same thing with a debit spread.
Okay. What else do we need to talk about? Apparently that made complete sense to them.
Oh, yeah. We also have to talk about, managing this. Like, if you're on a buy side and you don't know how to manage all this, I forget how I manage a buy side Iron Condor, but usually when it turns against me, I usually turn into like a really weird, awkward, out of this world condor. Like, one side's failing, I refuse to give up. And pretty much I'm left with a useless one. Either I close the losing side and keep the winning side, or with the winning side, I can decide to collect a little more credit because expiration's coming up soon. And like both strikes are in the money. The losing strike, well, I can't do anything about that part, but I still can manage the winning part. The winning part, I can collect more money by selling a condor. So a condor basically, because the side that's in the money, I can take advantage of one side and then start selling call credit spreads that are in money. In this case, Facebook has earnings, so we can collect very out of money call credit spread, or I don't know how much collateral you need. So that's one way to manage that.
So a great example is my Zillow spread, right? So I've got a Zillow spread right now for 106, 109, and it's going the wrong way. It's not doing what I need. So Tiffany, why don't you walk us through how I can attempt to save some of my losses on this spread?
So if it's what's Zillow right now? Okay.
Zillow.
So basically you don't have any more credit to go through. If you want to save that, that means you have to turn that into either Iron Condor, or basically you're going to turn it to a Condor. So a Condor is just selling one side. So Iron Condor is selling both sides. A Condor is pretty much you have to figure out what type of premium you're want to collect. So in this case, I probably would try to salvage it. How much did you pay for it?
215. No, wrong. No. I paid 115.
150?
115.
115. Oh shit, that sucks. Okay. So basically what we're gonna do, Zillow's probably trading in a range, so we probably have to do a credit spread for the puts because puts have now more premium. And then we're probably gonna be savaging that with a
Yep. So what I would do is I would come in here and I would say, well, it's probably not going to go below 90 at least.
Yeah, we're probably gonna do that way.
Yeah.
So we're gonna make it $2 wide to try to salvage it.
Yeah, there we go.
Yeah, and then we're probably gonna be looking at 100. So we're gonna probably sell 99 and 100. How much can Zillow move? I think I can move like $5 a day or something.
Yeah, $5. So I probably want to do this.
That one. That one.
And just try to make up some of my losses from basically killing my.
Right.
So
Maybe 101 would be a lot better though. If you did 101.
Yeah, there we go. Now, actually, if this landed, now my pop's 83%.
Wait, no. You just switched sides.
Oh, did I? Oops, my bad. Try that again.
Oh, that's better. Because that looks weird.
My bad.
Yeah.
That's what I was trying to do. Okay, so I'm basically I'm at a 71% pop. I'm basically just trying to save some of my $115 loss.
Yeah. It's pretty much a high probability kind of thing.
Yep.
So that would be okay. And then you get back some money. Probably you need a lot of collateral for this.
150.
Yeah. We're good on this. This one's a good one.
Yeah, and because I know Zillow, I mean, I really could get fancier. And again, this comes to Santi. You were asking questions how to increase your premium. I know this stock. I know this stock very well. So I could get more and more creative and start moving things up a little bit. I say I know this stock very well. I got screwed here on the spread somehow. The market screwed me. But like I said, I know this stock very well. So I could play I could play it a little bit safer and kind
Yeah,
of.
once you know a stock, it's much easier. Like that, that Disney spread. Since I know Disney so well, that I can actually do. Know that Disney can't go there at all.
Yeah.
And then
Like-
you have a president saying something and crashing the market. So
Yeah,
it's how
no,
it goes.
and that's exactly it, and that's how you get screwed pretty quickly on certain things.
But it's also you have to cut quick. I mean, it happens, and you
Yeah.
can't control it. So
I mean, you always want to set up your alerts, no matter what. No matter what you're doing, always set up alerts.
and that's why I
it's
keep
funny-
letting you guys in the loop with news. Like I pretty much try and like figure out, okay, Pelosi's gonna probably pump the market or something, or Trump is gonna crash the market, and I don't know what they're gonna do, but our Congress people are fucking idiots.
Yeah. Also, for the newer people that trade, remember that a lot of people that are in Congress as well as the Senate and hold these position of powers, you gotta do some research into what their spouses do, because sometimes their spouses will actually be day traders, such as Pelosi's husband, or people that run some of these companies that are like the Fortune 500. So you'd be surprised a lot of the connections that actually go through the House and the Senate and stuff like that. So just do your research, because anybody saying anything, doesn't matter who you are or what position you hold, anybody that has some sort of relevance can say something that can influence the market.
Right, they have really strong connections to industry, because then that crash that happened in March, the whole Senate committee, Senate Security Committee, sold their shares. You think that was messed up? Like everyone, they got the heads up, and anyone who didn't get the memo, they got the short stick.
Pelosi's husband bought right at the bottom.
I know I bought some at the bottom too, but I didn't get enough.
Me and Austin got a
I
few
told
calls,
Jared to get it.
and we ended up selling those things. We would have been rolling right now.
I should day trade my Iron, just penny stocks. I had home for like $4, and I look at home and it's like expensive. I bought 200 shares and I cashed out for a day trade. I sort of swung that one. That thing's like $20-something now. But yeah, whatever. So that's about it for Iron Condors. I know we went over the sell side and the debit side. If you guys have any more questions about the debit side, you guys can ask, or we'll put Austin up, and then
Yeah, so Austin just texted me. So the problem with moving the scheduled tip, and neither one of us took this into account, is Austin's whole thing is predicting the future, which he can't do because he doesn't know what the futures are. So he's got to wait for the futures market to open.
Right, so we're probably just gonna move it then, because I thought, okay, we could probably do it, and then Austin can do it without knowing the futures right now.
Yeah,
So what I'm going to do is I'm going to go ahead and do my little support and resistance training, and then we'll let Austin do his thing later. So let me just ping everyone on the schedule. I'm going to go ahead and stop this recording for you, Tiff.
Yeah, so that's about it for today, and then Uncle Eagle's going to take over. Next week, we are going to assume the 3 o'clock Pacific time schedule, so that's like 5 Central and 6 Pacific Eastern time, so everyone can hop on in. I know it's too early for everyone, and they're not thinking it's lunchtime, but we'll stick to that schedule because I thought we could do it much earlier. So Austin and I and Uncle Egan and I can start trading Forex at that time, 3 o'clock, like when market opens. But it probably would help more people and more people joining.